Thus, Ajay, there is an important story of Diwan Housing which has come, and I will just read out the salient feature and then you tell us that what does this mean. There will be no principal haircut to any creditors. The proposed steps and measures towards addressing aligning asset liability mismatch. Moratoriums will be given on repayment, seeking funding from bank, National Housing Finance, from starting the retail funding activity. Kindly take record of the same. This is what the meeting today has concluded. Can you explain these items one by one to us?
Well, that's correct. That much we can say, Pankaj, that we told you so. We at ET Now told you that the process is actually moving forward. We gave you ball by ball account of this resolution process which is moving forward. And it was not easy. I'm told that because of so many large shareholders, stakeholders in this process, SBI, Union Bank, Yes Bank, all these big lenders on the one hand, there were bond holders, mutual fund companies on the other hand, and then of course there were private equity strategic players which were keen, but they wanted to see what kind of a common arrangement they could be reached at. And there was a lot of push and pull, but now finally we can see that the resolution plan is actually moving forward. And the big point is that there will not be any haircut for the lenders. So this is very important. I would like to see how stocks of Union Bank, Yes Bank and SBI are actually reacting in trade, because they had exposure and a lot of their money would be getting reversed in coming quarters. In fact, we have Mr. Bhasin, Sanjiv Bhasin with us. Mr. Bhasin, I remember chatting with you right here when previously we had broken this news that DHFL is really going aggressive to get a resolution in place. Lenders are also supportive. All of that is happening. At that time, I remember you had said that there is high possibility that this plan may actually go forward, unlike what the street is fearing, that it may not go forward. So today, now there's the official release coming in and the stocks are reacting. What is your take now?
Well, I think it's a very big positive, and it puts an end to all this excessive pessimism that companies are going to go down under in a big way. I think, like I said, pessimism is overdone, and a resolution where maybe creditors have to take no hit is a very big positive. We know that they needed a moratorium on payment and interest with a lag, and now that they have some liquidity, they will be able to sell off the asset over the next limited period of time. We've also seen a resolution by Z where they sold 11% stake. So I think a lot of these companies know their back is to the wall, and they are doing whatever they can to reinforce the confidence.
So, Mr. Bhasin, do you also see that this particular issue, like Z, DHFL, some others, issues, the way they are getting sorted out, this will actually go out in improving the sentiment on the street as well, because people thought that these issues will never get sorted itself in the first place.
Correct. And Ajay, dark is darkest before the dawn. So we've seen that credit spreads come to the lowest in the sense that bond reads at a 3-4 year low, and yet RBI is flush with the repo liquidity of the highest since demonetization. So mistrust and a fear is seeing no lending. I think this will only gather steam, and a large part of the mid-cap banks which have got decimated because of the NBFCs should see a sharp positive for that. And as and when these deals take place in the next few months, I think it will only reinforce confidence. I'll also give you one more point. Look at the numbers from the top paint companies, the cement companies, the specialty companies. They are talking of double-digit growth in the future. In the end, paints industry is used in cars and in real estate and so on. So I think the pessimism is much overdone, and I think the markets need a shot in the arm.
Right. Sanjeev, this may not provide a shot in the arm, but definitely, one by one. First it was Z where lenders have now comfort. Now it is DHFL probably where lenders will have a little bit of better comfort than they had earlier. A few more, and you think the markets will start to price in that too much risk is priced into the markets and bond markets as well?
Correct. And the elephant in the room was IIFL. There was an asset liability mismatch. I won't go too much into it, but the commercial paper almost froze. Now you're seeing that at yields with a repo rate cut across, destined to be done tomorrow, I think you will, and globally, by the way, Pankaj, the yields have hit 1.75, the lowest in 4 years. So I think the fear scare globally is overdone. And I would say in the Indian context, in emerging markets, I think fund flow should return with a vengeance once we get more clarity from the FM on the taxation and a stimulus on growth. But as a confidence building measure, I think these 2-3 events, Z, DHFL and a couple of more resolutions should be very, very positive. We all know that IBC is seeing a lot of reclamation of assets and resolutions. You've seen that RCOM's assets are being bid for aggressively by Airtel and Jio. So I'm just giving you some positives in a time when gloom and doom is all over.
Right. Mr. Bhasin, I have a slightly technical question for you. What happens, in our view, what is happening is that a resolution plan has been given. There will be a moratorium and they will restart their lending program. So which means the debt will actually be, given back to the lenders, one in proportion to the money which comes in from the strategic investor and also the business which they restart from here on. So how much time do you think it will take for the residual DHFL to come back healthy as a company? Could it take 2, 3, 4 quarters or slightly longer?
Well, Ajay, it depends on the flow of risk-on assets. If yields remain here, the smart money will definitely start looking at reconciliation risk-on assets. And a large part of the DHFL portfolio, the India Bulls, I can name a whole host where credit has frozen because of liquidity. That should start to see a resolution. And once these deals go, because there will be a haircut on the deals, there will be ample profitability for the asset reconciliation companies or the other private equity investors who could not have asked for a better time. So I don't think this should take more than 2 to 3 quarters at the max.
And Mr. Bhasin, by when would the write-backs of the provided for portion of the exposure by lenders actually will start happening? Will it happen consecutively from here or with some gap?
See, already the company, whatever it's been beaten red, black and blue, has indicated that they are willing to sell a stake. They've got a partner in it. I'm not making up. I know that this has been some inadvertent stress which has caused all this. But they are shaping up to tell you that they are ready to do whatever it is to recourse the banks and the mutual funds their money. We heard that same from the Z. So give them time, and they have till September end, I think, most of them. And if the environment slightly improves, then I think definitely the government has it also in the know. They are talking of a stimulus. There's going to be a huge another rate cut. Your repo is down to 5.5. So you could not have it better on the macros. And the government's oil at $60 is another big positive, which means that the government can bite the bullet and add another stimulus, which should reinforce confidence.
Just a word as far as, what does this mean for the market? You've given us a DHFL perspective. What does it mean for Z probably if they do a similar sort of a deal for the remaining stake? What does these 2-3 things mean for the market put together? And plus the crude point that you were making.
So, Pankaj, like I mentioned in this, I think Asian Paint, Berger Paints are hitting fresh new highs. Cement companies' numbers on the margins and prices are the best and before the monsoon. Specialty chemicals, as a disclosure, SRF, Asian Paints are under my coverage. They came out with smart. So how can you have a paints industry giving you double-digit guidance and yet the industry which uses it is down in the dumps? So I think this is an opportune time actually to do a SIP for the next 10 weeks. I think by the festive season, middle of October, 3 things: the liquidity, the government incentive on stimulus, and thirdly, revival of demand should all add up. And I would be extremely positive on the market with 2020 maybe seeing new highs earlier than we thought.
Thanks so much for that. HP Ranina is also with us. Mr. Ranina, what do you make of the news flow? There has been a draft resolution plan which DHFL has submitted. How important is this? Ernst & Young has approved the submission and said that the resolution plan and send the Okay, I think that we just lost that line with him, but we'll continue with this story. Just wanted to read the release that they have said that we wish to inform you that a special committee for resolution plan at its meeting held today, that is 6th August Tuesday, which commenced at 9 a.m. and concluded at 12:15 p.m., had took on record the draft resolution formulated by the company in consultation with committee and its financial advisors, and key features, one of which is that there will be no principal haircuts to any creditors. The proposed steps and measures will be addressing aligning liquidity asset liability match. They seek funding from NHB, starting with retail funding activities once this is over. Okay, Mr. Ranina is now with us. Mr. Ranina, what do you make of this? Okay, I think he's not there with us. Is Ajay still there with us? Probably we can go to him. Ajay, if you can hear me, just explaining one by one. So the no proposal of principal haircut is one. The second is they seek funding from banks, NHB, for starting retail funding activity. You think this is a surprise that they would be starting in operations pretty soon?
This is a very big surprise, and basically the point that the news which just came a couple of weeks back that it stopped being an ongoing enterprise, that was a big one. And now, see, it is coming back on track, which means the resolution plan is such that after the plan is approved by the lenders, they will start getting fresh liquidity, not only from the strategic investor. By the way, we are gathering that the strategic investor will have 26% stake, not 51 as we had.
That's a different story, right?
Yeah, that's a different story. 51 will be mostly the lenders. Okay, in fact, Mr. Ranina is right here with us. Mr. Ranina, thanks very much for your time. How are you analyzing this big story break which has happened that, the official announcement of resolution plan of DHFL has come in? Our sources say that a strategic investor, a private equity company, Aeon Cap will pick 26%, remaining lenders will keep, and there will be no principal haircut, and fresh money will start coming in so that they can restart their retail business of lending. What is your take, sir?
I think this is a very good development because everybody stands to gain. And, if the strategic investor is happy with 26%, well and good. And if the lenders get the remaining amount and bring in more funds, obviously that will be a very good thing.
So my question, only question which comes to my mind a little bit is that 51% the lenders together will hold. Do you think that, this is perhaps the last resort in front of the lenders, otherwise take the full as a loss? Or perhaps, because lenders historically have kind of avoided taking majority stake in an operating company. Same was the case with Jet earlier.
Yeah, but lenders must be of the opinion that it's worth holding it so that when the share price goes up, they will slowly unload the holding in the market and not only recover all their loans with interest, but also maybe make a small profit. So I think that's an assessment of the lenders. And I hope that this trend continues. Just trying to dump everything, if they hold on to their shares, convert their loans into equity, and then unload at a later point of time when the company turns around and makes a good profit and the stock market price goes up, I think they'll be gaining a tremendous amount.
Right. All right, Mr. Ranina, we'll let you go on that one. Thanks very much for joining us. Mr. Ranina was saying that perhaps this is a near-term solution which the lenders are actually going forward. Once the company improves completely, then perhaps other investors can come in and lenders can recover their investment as well. But it's an interesting development which has happened, and we'll also try and get you some of the lenders to this who have larger exposure here, but that will happen later in the show. For now, it's a wrap.
But Ajay, just before we wrap, just wanted to say congratulations on the story. You reported it on July 22nd that the COC will probably not give any cuts to the principal cut to the lenders. And that's what the resolution plan has come in. The stock at the bottom of your screen is up 8%. We at ET Now told you first a couple of weeks back that this is the likely scenario coming in the draft resolution plan. On that note,